Alright, now we are talking about the adjustments and the reconciliation. These are the two different things. So there's a difference between the adjustments and the reconciliation. Remember, we have two documents. We have the cash book, which is our own document or the document of the business in which they are recording all the details of their banking. And then they have another document which is not their document, and the document which is provided by the bank, that is known as the bank statement. When we are making adjustments, for example, we talked about the standing order payment that is being reflected within the bank statement and still not in the cash book. So we'll be making adjustment in the cash book. Remember the direct credit, the amount directly went to the bank. It is being shown within the bank statement, but that is not being shown within the cash book. So you are going to adjust it in the cash book. So remember, when you are doing the adjustments, you will be making the adjustments within the cash book, because the document that belongs to you, that belongs to the business, is the cash book. You cannot make the adjustment in the bank's document, which is the bank statement. Any sort of business will not have the access to change the bank statement. This is the complete authority of the bank to change it, and the business cannot involve it in the adjustments pertaining to the bank statement. But for example, if you have the cash book balance and you want to reach to the bank balance, that means the balance in the bank statement, that is the reconciliation. You have the bank statement balance and you want to reach to the balance of the cash book. This is the reconciliation. The reconciliation involves comparing two documents, comparing the cash book with the bank statement. This is the reconciliation. See which of the items are shown within the bank statement and not in the cash book. See which of the balances are shown in the cash book but not in the bank statement. This is all about reconciliation. But when you are making the adjustments are being made within the cash book. You cannot change the bank statement by yourself. Even if there are errors in the bank statement, bank can make errors. There may be errors within the bank statement. Still, even if there are errors within the bank statement, it is the bank who will be making the adjustment in that. So formulas are three formulas which will be involved in the whole bank reconciliation. And there are many ways to do it, but still this is the most common way explained in every book and from which you can do the bank reconciliation. The first formula is the cash book unadjusted balance to the cash book adjusted balance, and this is known as adjustments. When you're making adjustments within your cash book, this is entirely the document of the business. You have the balance within your cash book, and you realize that this is an unadjusted balance. How you realize that is unadjusted? Because you still have to perform some adjustments in it. And how you will realize that there are some adjustments to perform? After doing the reconciliation, that when you are comparing your cash book with the bank statement, you will realize there are certain items which have been recorded over there and still they needs to be adjusted in your cash book. So whenever you are doing the adjustment, the adjustments will be made within the cash book. So the formula number one is going from the cash book unadjusted balance to the cash book adjusted balance. The formula number two is bank statement to the cash book. Like for example, we have the balance of the bank statement and we want to reach to the balance of the cash book. You will use the formula number 2. If you have the balance of the cash book and you want to reach to the balance of the bank statement, then you will be using the formula number 3. So these are just the sequence 1, 2, 3. Obviously in the exam they will not be asking you to put the formula number 1 or the formula number 2. This is our sequence of doing it. In the exam they will be asking you, for example, that you have the cash book unadjusted balance, calculate the cash book adjusted balance. They may ask you that you have the bank statement balance, calculate the cash book balance. Then you use the formula number 2. For the examiner, there is no existence of this formula 1, 2, 3. They will be just asking you to calculate a particular figure. That's it. So if in the exam they are asking you to calculate the cash book adjusted balance and the unadjusted balance is being given, use the formula number 1. If they have given you the bank statement balance and asking you to calculate the cash book balance, use the formula number 2. If they have given you the cash book adjusted balance and they are asking you to calculate the bank statement balance, then use the formula number 3. There are two other possibilities as well. Like in this, they will be giving you unadjusted balance, the cash book, and asking for adjusted. Over here, they will be asking, you have given you the bank statement adjusted balance and asking for the cash book adjusted. Over here, they are giving you the cash book adjusted and asking for the bank statement adjusted. And there are two further possibilities as well. The two further possibilities are, and obviously I'm not writing it as formula number 4, the formula number 5, because the other two possibilities can be done by the same formulas and with just some doing some adjustments to it. For example, the examiner may give you the cash book adjusted unadjusted balance, sorry. The examiner may give you the cash book unadjusted balance and ask you to calculate the bank statement balance. Now we do not have any formula which goes from cash book unadjusted to the bank statement, because formula number 1 is cash book to cash book, that means unadjusted to adjusted. Formula number 2 is bank statement to the cash book. Formula number 3 is cash book to the bank statement. But if the fourth scenario is being given in the question, that you have been given the cash book unadjusted balance and they're asking you to calculate the bank statement balance, then first of all apply the formula number 1. When you apply the formula number 1, the cash book unadjusted balance will be adjusted. Then apply the formula number 3, because you already have the cash book adjusted balance from formula number 1, which takes you to the formula number 3, and then you can simply calculate the bank statement balance. Another possibility in the exam may be that they have given you the bank statement balance. They have given you the bank statement, and obviously we have the adjusted balance always of the bank statement. Bank statement adjusted balance, and they are asking you to calculate the cash book unadjusted balance. Now again, we do not have any formula which takes us from the bank statement adjusted balance to the cash book unadjusted balance. So first of all, we are going to apply the formula number 2. When we apply the formula number 2, what we will get, bank statement adjusted balance to the cash book adjusted balance. Now we have reached the cash book adjusted balance. Now we will be applying formula number 1 with reverse calculation. Now what is this reverse calculation? You already know it, because in the accounting, you know, there are some maths involved. So reverse calculation means that reverse the formula number 1. The things which are being added will be deducted. The things which are being deducted will be added. So first of all, you will be applying formula number 2 to get the cash book adjusted balance, and then reverse the formula number 1 to go from cash book adjusted to the cash book unadjusted. Anyways, this is the simplest thing to understand, but you can get more about it while doing the questions. So we are having the formula number 1, and formula number 1 is quite logical. Anything which increases your cash book balance will be added. Anything which decreases your cash book balance will be deducted. So first of all, starting with the balance as per cash book, and that is going to be unadjusted balance. What things you are going to add? Add the direct credit. Now hopefully you remember from the last slides, direct credit is the amount which was directly credited in your account, which directly came into your bank statement. So it was being shown over there, but it is not yet being added to the cash book. So add in the cash book. Bank interest received. Bank directly credited the interest in your account, but you have not added yet it to the cash book. So just add it. And then less. Direct debit standing order payment directly deducted from your bank statement. So deduct from the cash book now. Bank charges are being directly deducted from the bank statement, just now deducted from the cash book. Bank interest is directly deducted from there, just deduct from the cash book. This honored check was added to the cash book and it was not cleared. Now you need to deduct it from the cash book. So you will get the cash book adjusted balance. You can do this in the form of the T account as well. So you take the opening balance, and this opening balance is going to be unadjusted. Take the opening balance, and this opening balance is unadjusted. Now anything which increases the cash balance comes on the debit side, which involves direct credit and the bank interest received. Anything which decreases the cash balance comes on the credit side, which includes direct debit and the standing order payments. We have the bank charges, we have the bank interest paid, we have the dishonored check, and then you will get the closing balance, which is going to be the adjusted cash book balance. Now this is the simplest way to calculate the unadjusted to the adjusted thing. But in the exam, there may be some errors relating to the cash book, and the examiner may ask you to rectify those errors. Errors may be the omissions, like you forgot to record anything within the cash book. Errors may be related to the understatements. That means you recorded the less amounts. Errors may be related to the overstatements, that you recorded more amounts than actual. Or errors may be related to the incorrect side, putting the balance on the incorrect side of the T account. So there may be four types of errors. Omissions, you forgot something to record within the cash book. Understatement, you recorded less amount than actual. Overstatement is you recorded more amounts than actual, and recorded on the incorrect side, or you can say wrong side of the T account of the ledger. So once you have errors within the cash book, you need to rectify it. Examiner may ask you regarding the rectification. Rectification simply means rectifying the errors. So omissions adjustment is quite simple. You forgot to record something, for example direct credit. You forgot to record something, it is being recorded on the debit side, so just record on the debit side. Or for example, if you're doing in the statement form, direct credit is added, you just add it to the balance. Understatement is you recorded less amounts. So the rectification of the omission is just record it. Understatement is record the difference. Record the difference on the correct side. Like for example, bank charges, you recorded it less. Now bank charges comes on the credit side. For example, you recorded bank charges 50 lesser than the actual, so just write 50 on the credit side. Or if you're doing in the statement form, just less or deduct 50 from here. Overstatement is record the difference on the opposite side. Like for example, bank interest received, you are supposed to record 100 and you recorded 150. Now take 50 on the opposite side. Or bank interest is usually added, so in order to deal with the overstatement, you need to deduct the difference so that it comes to its actual amount. So overstatements is record the difference on the opposite side. When you are recording it on the opposite side, this will correct it. For example, like we have the bank interest. Now bank interest received comes on the debit side. Now let's assume it was supposed to be written as 100, but accidentally you have written 150. Now what we need to do is take the difference on the debit side, credit side, which is bank interest. When you write 50 over here, then the adjustment will be done, and automatically it will be the 100 which is being recorded within the ledger. And when you have done the error which is the incorrect side, Now what you need to do is to record the figure on the correct side with double amount. Let's assume you are supposed to record bank charges on the credit side of $50. Instead, you have written bank charges on the debit side. Now, what you need to do is you need to record 100 over here. So when you record 100 on the credit side, this will automatically reach to the 50 being recorded on the credit side. So when you have the incorrect side error, you need to record the figure with the double amount on the correct side. Correct side means where it was supposed to be actually recorded. So this is how you are going to deal with the formula number 1. In the exam, examiner may gives you errors such as omissions, understatements, overstatements, incorrect side error, and they may require you to rectify the thing. Or they may give you the opening balance plus the other things to calculate the closing balance. Or they may give you an activity to calculate the balancing figure. Now what is balancing figure? For example, they have given you the opening balance, bank interest received, bank charges, closing balance, and then they are asking you to calculate the direct credit. The simplest treatment is put all the balances which have been given. The balancing figure will come automatically, whatever it is. Either it's a direct credit or bank charges or bank interest paid, whatever. The formula number 2 is going from the bank statement balance to the cash book balance, and both are adjusted. So you take the balance as per bank statement, and now remember, what were the outstanding lodgements? Outstanding lodgements is you have been given a check from your customer, you have added that thing to your cash book, and you have submitted that thing in the bank, but the check is not yet cleared. So it is being shown in the cash book but not in the bank statement. Unpresented checks are being deducted from the cash book and you have given it to your supplier, but they have not yet taken it to the bank, so it is not being shown within the bank statement. So if you have the balance as per bank statement and you want to reach to the cash book balance, add the outstanding lodgement, because when it is being cleared, it will be added. Deduct the unpresented checks, because when the supplier takes the check to the bank, it will be deducted and you will reach the cash book balance. And then the opposite thing, formula number 3, going from the cash book to the bank statement. The cash book already includes the unpresented checks because you have already deducted it. So add it back. The outstanding lodgements are being added in the cash book, so deduct it and then you will reach the bank statement balance. So if you want to do the bank reconciliation, remember this thing, that you need to have a grip on these 3 formulas. Formula number 1 is very important because it can be done in the statement form, it can be done in the T account form, and then the rectification of errors is very, very important. The formula number 2 is about reaching from the bank statement balance to the cash book balance. The formula number 3 is about the cash book to the bank statement balance.